If you're wanting to buy a house in 2022, chances are it won't be a real pleasant experience. I'm just being real. It's gonna take some patience, discipline, and organization. In this video, we'll go over some things you can do to have a better chance of getting your offer accepted and going with proper expectations. With that being said, here are 5 things that you should do to get ready to buy a house in 2022. Number 1, expect to pay at or over asking price and possibly get in a bidding war. I cannot stress how low inventory is in most markets. In 2021, over 50% of sales had multiple offers. You've probably heard the term balanced market. Now, a balanced market means that there's about 6 months worth of inventory on the market, which means if no one put their house on the market for 6 months, all the houses would be gone. But nationwide, a lot of markets were still below that. There's still a lot of markets where we're less than 1 month's worth of inventory on the market. Number 2, get pre-approved with a reputable lender. When you've got multiple offers, who you work with really matters. A pre-approval letter from a good loan officer carries more weight than a pre-approval letter from a mega lender or a big bank. In the mortgage world, a lot of lenders or banks that are household names don't really have the best reputation for closing loans on time. The loan officer you work with is much more important than the company your loan officer works with. So when you're trying to find a loan officer, look at their reviews online, look at their social media. You can even pull up your loan officer's work history online. I'll put a link in the description for that website. Number 3, expect to pay a higher interest rate. At the time of filming this, the average rate for a 30-year fixed rate is a little over 4%. Still a great rate historically speaking, but over 1% above what rates were this time last year. Because rates are going up, refinance volume is going down. When that happens, these mega lenders and huge banks start laying people off. I did a video last week on the hiring and firing cycle these huge lenders go through every time the rates go down and then go back up. I'll link that video in the description and at the end of the video. Now, most forecasters expect the Fed to raise rates between 3 and 4 times before summer. The main reason they plan on doing this is to try and get inflation under control. But some experts think that a conflict between Russia and Ukraine could cause the Fed to raise rates at a slower pace. But keep in mind, the Fed doesn't set mortgage rates, so them raising rates doesn't necessarily mean mortgage rates will rise every time they bump up rates. Number 4, submit a unique offer with a rent back or maybe an appraisal gap. To get your offer to stand out above the others, you may try to offer what's called a rent back. A rent back is where you agree to let the seller continue to live in the home after closing while they pay you rent. This can be really effective, especially in today's market, because a lot of sellers want time to find their next home that they plan on buying. I don't normally love this idea, but this isn't really a normal market. Another way to possibly make your offer stand out is an appraisal gap. An appraisal gap is when you agree to cover a certain amount of the difference in the sales price and the appraised value. For example, let's say you submit an offer for $500,000 with a $20,000 appraisal gap. Then the appraisal comes back at $480,000. In a normal market, that would be a huge issue. But again, this isn't a normal market. With an appraisal gap, you as the buyer are still agreeing to pay $500,000 even though it appraised for $480,000. Now, to calculate your loan to value, your lender will go by whatever's lower, the appraised value or the purchase price. So before you offer an appraisal gap, make sure you ask your lender if that would be a possible option for you. Number 5, be patient, but be prepared to act fast. This is probably the most important one. It's really important that you know your numbers. If you know that you can afford a $2,000 monthly payment, don't get yourself in trouble by buying something that ends up being a $2,500 monthly payment. Now, the really tough part of this is that you may have to adjust your expectations or change the location you're looking in. But when a house you like pops up, get a showing scheduled ASAP and have your pre-approval letter from a reputable lender ready. I really hope this helps. In a market like this, it's really important that you go in with the right mindset and surround yourself with the right professionals. If you have any questions, drop them in the comment section. If this is your first time seeing me, my name's Nate, and I've been a loan officer for about 10 years. I make a lot of educational content about mortgages, real estate, and credit. If you're into that, consider subscribing and hit the bell.